Managing expenses in Busy. This presentation will give you an overview on managing expenses in Busy. Managing expenses basically refers to entering transactions for the expenses you have made. Basically, there are a lot of office expenses, and now with the coming of GST, you have to differentiate between the unregistered RCM purchases, registered expenses and all. So in this presentation, we will discuss that how you will create expense account, basically specify their ITC eligibility, reverse charges applicable on them or not, and in case reverse charge is applicable, then it is based on daily limit or is it compulsory. And then while entering transaction, when you will use these accounts, then what GST nature you will specify, that is the transaction you are entering. Like if we are entering a payment voucher, then we have to specify the GST nature as not applicable or unregistered RCM purchase, registered expense and so on. So in this presentation, we'll try to cover all such cases so that you can easily manage expenses in Busy. First of all, we'll start with account creation. We'll go to Master's Account, Add option. Here we are creating an account for office stationery. We'll take its group as expenses indirect. Here I want to specify that you may have stationery chargeable at different rates, so you can create separate accounts also tax rate wise, like office stationery at 12%, office stationery at 18%, so on. Here we are taking office stationery for GST 18%, so we have specified the tax category as GST 18%. Next is ITC eligibility, that is whether expenses made under this account head will be liable for ITC, that is we can claim ITC on these expenses. So here there are four options. First is input goods, that is ITC can be claimed under input goods. Input services, ITC can be claimed under head input services, or these expenses are for capital goods, or none, that is you cannot claim ITC on these accounts. Next is reverse charge. In this you see four options are appearing. First is based on daily limit, that is liability of reverse charge will depend on the minimum daily limit. Minimum daily limit is 5,000 rupees, and if the total consolidated expenses of a day exceed rupees 5,000, then only you need to deposit RCM to the government. Next is compulsory registered dealer. Here I'll explain this option with the help of an example. Like in case of transporters and lawyers, if you have taken services from registered transporters and registered lawyers, then you need to necessarily deposit RCM to the government. In such accounts, you will select the option as compulsory registered dealer. There is no minimum daily limit for these accounts. Like you have made expense even below 5,000 rupees, then also you need to deposit RCM to the government. In such cases, like I have mentioned, transporters registered and registered law firms, you will select the option as compulsory registered dealer. Next is service import, that is you have imported services from a company outside the Indian territory. For example, I have taken server hosting space from a company in US, then it is a case of service import. For such expenses, you will select the option of service import. Next is not applicable. If reverse charge is not applicable, then you will select this option. Click Save button to save the account master. Next, we will create an account for office miscellaneous expenses like soaps, phenyls, detergent. Here also group as expenses indirect. Tax category, ITC eligibility, input goods and reverse charge based on daily limit. Next, we'll create an account for food and beverages. Here in the ITC eligibility, you can see I have selected the option as none, because in case of food and beverages, groceries like tea, coffee, sugar, cab rentals, any health and fitness membership, club membership, you will not get any ITC claim. For such accounts, you will select the ITC eligibility as none. In case of food and beverages, like if you have ordered food from some restaurants, you will not get any ITC claim. Reverse charge again based on daily limit. Next, we are creating an account for telephone mobile expenses. Here we have taken the ITC eligibility as input services, because telephone expenses are a case of input services. We are taking services from a company. Reverse charge based on daily limit. Next, we are creating account for car servicing expense. For this expense also, we'll take ITC eligibility as input services and reverse charge as based on daily limit. Next, we'll create an account for transportation charges registered. That is, we are taking transportation services from a registered dealer. Here, tax category services 18%, ITC eligibility input services and reverse charges compulsory registered dealer. As I have said earlier also, that for transporters and law firms, if you are taking service from a registered dealer, then it is necessary to deposit RCM for the services taken. So in this account, we'll take the RCM as compulsory registered dealer. Next, we'll create account for transportation charges unregistered. That is, we are taking services from a transporter who is not registered or who does not have a GSTIN number. In this case, tax category services 18%. We can claim ITC, that is ITC eligibility input services, and reverse charges based on daily limit. One thing here you can understand that unregistered expenses are like unregistered expenses. They will always fall under based on daily limit head. That is, if the total consolidated expenses for a day exceeds 5,000 rupees, then only you need to pay RCM to the government. For registered transporters and lawyers, you will take compulsory registered dealer option. If you are taking services from a company which is outside Indian territory, then you will select service import option. But for most of the expenses, we'll take the option as based on. Till now we are done with the account creation. Now we will see how we can use these accounts in various vouchers. We will now enter payment, journal or purchase vouchers for the expenses made. Here first we will enter a payment voucher for the various expenses we have made. We'll go to transactions, payment, add option. We are entering this voucher for 1st of July. In the GST nature list, you can see various options are appearing. First is not applicable, that is, this transaction is not related to GST. Next is unregistered RCM purchase / expense. You will select this option when you have made a purchase from an unregistered dealer, that is, the payment you are making for an expense account is to an unregistered dealer who does not have a GSTIN number. Next is registered purchase and expense. We'll explain this with the help of an example. If you are paying like Airtel bill and the Bharti Airtel company is printing your TIN number on the bill, then this will be the case of registered expense. As the bill itself included the CGST and SGST amount, you can only get the input tax eligibility for it. For such type of expenses, you can select the registered purchase expense option. Next is refund against advance receipt. That is, if you are refunding amount to a party for the advance amount you have received. And next is GST payment to government. If you are making any GST payment to the government, then you will select this option. So first of all, we are entering a voucher for unregistered RCM purchase / expense. We are debiting the office stationery account with 1200 rupees and crediting cash account with 1200 rupees. This shows that we have purchased office stationery worth rupees 1200 from an unregistered dealer. This expense will be liable for RCM if the total consolidated expense for 1st July exceed rupees 5,000 rupees. Next, we are entering one more payment voucher on 1st of July. GST nature as unregistered RCM purchase / expense. Here we are debiting food and beverages account for 800 rupees. We are assuming that we have ordered food and beverages from a vendor who is not registered. So this will be the case of unregistered RCM purchase / expense. And I'd like to tell you that in case of food and beverages, you will not get any ITC claim. Next, we are entering one more payment voucher on 2nd of July. Here we are taking the GST nature as not applicable. We are debiting the travelling expense railways account and crediting the cash account. This means we have booked railway tickets, and this will not be the case of registered expense, as the railways will not print your TIN number on the rail tickets or bill you will receive. So this is simply GST nature, not applicable. Next, we are entering one more payment voucher on 2nd July. Here we have taken the GST nature as registered purchase / expense. We are debiting telephone mobile expense with 2700 rupees, debiting CGST and SGST input accounts with 243 rupees and crediting the State Bank account, that is, we have made this payment through check. So on saving this voucher, a registered expense window will appear in which you will specify the party as Bharti Airtel Private Limited. That is, we are depositing telephone mobile bill to Bharti Airtel company and the company will print our TIN number on the bill. Specify purchase invoice related details, ITC eligibility, input services, and this adjustment would be reflected in GSTR 2. So this is the case of registered expense wherein you are paying a telephone bill amount to a registered company who has already charged the tax in the bill, but you will get ITC claim for it as your TIN number will be printed on the bill. Next, we are entering one more transaction on 5th July. Here we are taking the GST nature as unregistered RCM purchase / expense and debiting the telephone mobile expense for rupees 300 rupees. Here we are assuming that we have recharged mobile with 300 rupees from an unregistered dealer. So you can see in the previous transaction for the same account we have taken the GST nature as registered expense, as in that transaction we have paid the bill to a registered company, Bharti Airtel, and in this transaction we are assuming that we have recharged the mobile for 300 rupees from a vendor who is unregistered. Next we are entering one more voucher on 6th of July. Here we have taken the GST nature as unregistered RCM purchase / expense. We are debiting the transportation charges registered account with 6,000 rupees and crediting the cash account with 6,000 rupees. Although the transportation charges we are paying to a registered dealer, but we have taken the GST nature as unregistered RCM purchase. This is because I have mentioned earlier also, in case of transporters and lawyers, it is mandatory to deposit RCM to the government. So even if the transporter is registered, you will select the GST nature as unregistered RCM purchase and will deposit RCM to the government for this transaction. Next we are entering one more transaction on 8th of July. Again GST nature is unregistered RCM purchase, but here we are debiting the transportation charges unregistered account. So in case of transporters, whether they are registered or unregistered, if you are paying any amount to them, you are bound to pay RCM for that transaction. Next we are entering a voucher on 8th of July. Unregistered RCM purchase for car servicing expense, that is we have repaired car from a roadside vendor, so this transaction will fall under unregistered RCM purchase. Next we'll enter a journal voucher, as some people have the habit of entering a journal voucher also, so we'll show the example of journal voucher here. We are entering journal voucher for 10th of July and we are taking the GST nature as registered purchase / expense. We'll debit the car servicing expense account with 8,400 rupees. That is, we are assuming that we have given our car to the registered service center. In the previous transaction, if you remember, we have taken the same account, but we have taken the GST nature as unregistered RCM purchase. This is because in that transaction we have assumed that we have taken car services from a roadside vendor who is unregistered, but in this case we have sent our car for servicing to us registered service center, wherein service center owner will provide us the bill with our TIN number printed on it and GST included on it. This bill we can use for Itc eligibility. On saving the voucher, a registered expense window will appear in which you will select the party as Galaxy Toyota, enter details related to the purchase bill and Itc eligibility input services, as we have taken services from a registered person. This adjustment would be reflected in GSTR 2. So this is the case of registered expense where the bill include the GST, CGST, SGST amount and your TIN number is printed on the bill so that you can get the ITC claim. Next we'll show the example of entering purchase vouchers for various expenses made. For this, first of all we'll create item master. For this we'll go to master's item add option. Here we are creating an item with the name soaps, specified its group, unit, tax category as GST 18%, HSN SSE code, specify purchase account yes. Here we'll take the account as office maintenance expense account soaps vinyl, that is we have tagged this account with this particular item. Next we'll create one more item with the name mosquito repellent, specify its tax category HSN code, and in the specify purchase account field we'll take the account as staff welfare expense account. So we have tagged this account with this particular item. Click save button to save the item master. Next we'll enter purchase voucher for these items. Here we are entering a purchase voucher on 12th of July. We are taking purchase type as LGST unregistered RCM. That is, we are purchasing goods from an unregistered dealer, party as cash, ITC eligibility, input goods services, reverse charge based on daily limit. Here we have purchased 10 pieces of soaps at rupees 25 per piece. Next we'll enter one more purchase voucher. This is our normal purchase, regular purchase from a registered dealer. Purchase type LGST 28%, party we have specified as Ayush Traders, ITC eligibility yes, input goods services, mosquito repellent 10 pieces we have purchased at rupees 70 per piece, and we have charged CGST and SGST bill sundry in the bill. So this is our regular purchase for any office expense. Next we'll go to display GSTR reports, GSTR 2 report. First of all we'll view this report for the month of July and for the section 3, inward supply from registered person other than reverse charges. So on the screen you can see Busy has shown all the registered expense transaction. Here you can see that Busy has also shown that purchase voucher we have entered for Ayush Traders. Next we'll go to transactions, GST miscellaneous utilities option. Here by using check post consolidated RCM payable option, you can view the dates on which there is an RCM liability, and from here also you can press the F4 key and post a journal voucher for the RCM liability. So in this presentation we have tried to cover almost all the office expenses. Hope after going through this presentation you would be able to easily enter transaction for various expenses in Busy. Thanks for watching. For more videos, subscribe to our YouTube channel.